Well, how much do we need to do? What amount do you think we need to spend to get the economy going again? And why won't this stir the so-called bond vigilantes and move interest rates higher?
Well, we need to be spending several hundred billion per year more than we're spending. We need to get something that will get unemployment down below 7%, get it into a range where the economy, where the engine can catch, kind of a jump start, where people will have jobs, they start buying houses again, where you can get things moving. It's certainly you need several hundred billion a year. Now, if you ask, well, won't that send won't the bond market get freaked? Think about what it means, what the actual impact on the U.S. long-run debt position of spending, let's say, make it even $1 trillion over the next 3 years, which I don't think we're going to get. That money is going to be borrowed at a very low interest rate. It's going to have very little effect on future debt service. And in fact, the actual budget cost of that borrowing, of that spending, is much less than the headline number, because it will mean a stronger economy, which will mean more revenue. It will also mean a stronger economy in the long run, because a depressed economy damages your long-run prospects as well. And it's a pretty good bet that the long-run fiscal position of the United States would actually be improved, not worsened, by spending more right now. That's a view that a lot of serious people, having done the numbers, people like Larry Summers, have come to. So the notion, this is a classic short-sightedness thing, to say, well, we need to pinch pennies and depress the economy further because we're afraid of some hypothetical attack.
But a big question is, how do you spend the money, and how do you spend it fairly? Because we've seen not just the GSA, but during the TARP bailout, we saw a lot of money go to bonuses when it shouldn't have gone to Merrill Lynch bonuses. So how do you spend that money fairly so it goes to the right places and it isn't pocketed by places where it shouldn't be pocketed?
Well, first of all, we've taken a few anecdotes about bad stuff, and there have been some bad stuff, but it's actually very small. Where are the giant corruption scandals surrounding the Obama stimulus?
Well, Solyndra, $500 million.
Solyndra wasn't even part of the stimulus. It was part of an energy loan program.
But it's still government spending, which is, people say, look, he just threw $500 million there. It could have been spent on roads, perhaps.
Well, but the fact of the matter is it wouldn't have been spent at all otherwise. But the main thing to say is, actually, one of the main sort of things that hasn't been said before that I try to make a point of in this depression now, is that it's actually easy now, much easier than it was 3 years ago. So we don't have to come up with a lot of new projects. What we've actually had is the reverse of stimulus. We've had huge cutbacks at the state and local level. Cutbacks mostly forced by the fact that they can't borrow in the way that the federal government can. If we simply restore the aid programs to state and local governments that we had in the first year of the Obama administration, then we can get them to rehire the school teachers, to restart the road projects. Right up front, you can get more than 1 million people employed, not doing stuff that's brand new or speculative, but basically the stuff that they were already doing. And you can put several $100 billion a year into the economy just by doing that.
And that will create sustainable demand, because that's what we need, right? Not just a one-shot deal. We need the demand to be sustainable.
But we need the demand now. The reason you need this government intervention now is that at the moment, private sector demand is depressed. Private sector demand is depressed because there was a housing bubble that burst, because there was a debt overhang that was created by the borrowing during the housing bubble. That is gradually being healed. Private sector debt levels, household debt levels, have been falling relative to income. Housing, the overhang, we built very few houses for 6 years now. So we are in fact working off that excess of construction that took place during the bubble years. So this is if we can give the economy, sustain it for another couple of years so that the private sector has a chance to rebuild its balance sheets, has a chance to work off that overhang of excess construction, we won't need the stimulus thereafter. This is the lesson of the stimulus that ended the Great Depression, which was otherwise known as World War II. After we'd given the economy several years of prosperity, we didn't need to keep it going. We were able to have a self-sustaining private sector recovery.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to